The United States is currently facing a period of intense internal and external turmoil following recent military provocations by the Trump administration that have sent shockwaves through global markets. Energy prices have experienced a historic surge, with New York crude oil futures jumping 12% in a single night to reach $90 per barrel. In the 5 trading days since the initial conflict began, oil prices have climbed by more than 35%, marking the largest single-week increase since the inception of crude oil futures trading in 1983. This volatility has translated into significant losses for the American stock market. The Dow Jones Industrial Average plummeted 900 points during recent sessions, while the Nasdaq saw a decline of 1.6%. Major technology corporations are facing a widespread sell-off, with Nvidia dropping 3% and companies like Tesla and Meta recording losses exceeding 2%. Unlike previous Middle Eastern conflicts that often resulted in brief market fluctuations, analysts suggest that the current geopolitical landscape has fundamentally shifted following the targeted strike against Iran's top leadership. Retaliatory actions from the Iranian Revolutionary Guard have targeted several key locations, including United States military bases in Bahrain and the embassy in Saudi Arabia. Observers note a strategic effort to exhaust American resources, as inexpensive drones costing roughly $50,000 apiece are being countered by defensive missiles that cost several $1 million each. Reports indicate that the United States has already expended hundreds of Tomahawk missiles and an alarming number of air defense interceptors, which could take years to replenish. This military escalation coincides with dire economic forecasts. Critics argue that the American economy is built on a fragile foundation supported by the flow of petrodollars from Gulf nations. A prolonged war or a blockade of the Strait of Hormuz could cut off this vital financial lifeline, bursting the current artificial intelligence and technology bubbles. Recent economic data supports this grim outlook, as February non-farm payrolls unexpectedly decreased by 92,000, while the unemployment rate climbed to 4.4%. The combination of skyrocketing energy costs and a cooling labor market points toward a state of stagflation, a scenario that leaves the Federal Reserve with few viable options. If the Strait of Hormuz remains restricted, a passage responsible for 17 to 20 million barrels of oil daily, prices could easily surpass $100 per barrel. Under such conditions, the prospect of interest rate cuts vanishes, potentially leading to further hikes that the high valuations of tech giants cannot sustain. Investors are being cautioned that the era of a soft economic landing is over, replaced by a cruel reality of policy deadlocks and deep market corrections.